Welcome to Trade of the Week with me, Zinati Kumba. This week, the JSE's Sasol, Kumba Iron Ore and Thungela Resources are up for technical analysis. And joining me with his survey is Petri Redelinghuys, founder of Herenya Capital. Thank you so much for your time, Petri. I'm going to say that I'm not surprised that you're talking about commodities because we've seen so much action for the last few weeks. Are we fully officially in a commodity upcycle?
Not yet, I don't think.
Okay.
But we're trying to preempt it, which is why we're talking mostly commodities today.
Yeah.
And I think people who've been following along for some time now has probably heard me talk about Sasol endlessly for some time.
Yes. I mean, have you been putting your money into Sasol bit by bit? Because for a long time, a lot of people had actually been dumping Sasol.
Yeah. So we hold it in managed portfolios for clients, and we use opportunities of weakness to buy and sell. And I, a couple of weeks ago, took an enormous amount of flack on Twitter from it, actually, where we were said that Sasol was down massively on the day. Let me just find the actual chart here for you. I'll show you annotations. Sasol had taken a bit of a hard day. And, we said, hey, consider buying some Sasol today. And people responded with, you what a ridiculous suggestion, and all the rest. And we were buying then. The first one was at 82.55, and then the next day we bought again at 79.59, and we've sold some at 90, and we're looking to sell some more at $100. So we've been in and out of the stock whenever there's...
I like what you're saying, in and out, because that's the thing, because a lot of our viewers are long-term investors, and so they want to buy a stock and they want to leave it.
Look, so I'll put it this way.
Yeah.
We have a core position in the stock, which we probably won't sell for the next 5 years.
Okay.
Right?
Okay.
But when there is excess volatility, we can do some, call it volatility arbitrage.
Okay.
Right? The stock drops 7 or 10% in a day. That's going to be an opportunity for us to buy some. It sort of closes that gap. I mean, if we look, this is a very, very messy chart over here, so I'll zoom in as much as I can, right?
Yeah.
I've got another version of this that's a bit more clean, but we have essentially a big gap here. So that was an opportunity for us to buy. When that gap closes, we want to get out, right? So we've got some on offer here sort of at just below this this peak high, and if we get above this peak high, then we have this situation where we think the trend changes. So I'll get a slightly cleaner chart just for the sake of ease. So this sort of gap closing. So when we see this type of opportunity, we're going to take it. That's the kind of volatility arbitrage stuff, or the trading that volatility that we do. Okay. However, we do have a longer term core position in the stock that we probably won't sell for a very long time, because the way we look at it is we have this trend changing type of situation happening where we've been in a long downward channel since the highs of 2022. I mean, obviously, we come off those COVID crash. Everybody panicked. No one's going to use oil ever again. Lows.
Yes.
We had quite a run off the back of that. And since then, it's been this slow sort of grind down. We believe that we're now in a situation or in a space where we're finally starting to see the commodity cycle turn a bit. And, there's a couple of things that's quite interesting. The rise of AI, right?
Yes.
Yes, Sasol is a very diverse stock, a chemicals business, whatever, but also it's an energy business, right?
Yes.
And I don't know how much AI you're using. I find I'm using it more and more. But the energy consumption per AI search, for example, or, hey, write this email for me, or, hey, crunch these numbers, or whatever it is that you're using to generate this picture. That uses an enormous amount of energy. So if you think that AI is the future, we're going to have to double or triple our energy production capacity over time, which means energy companies are going to have to be, bullish plays, right?
That's something interesting that you're adding on to that conversation, because I mean, a lot of people, when they look at AI, it's just about the AI and what it can do, but
it
not really
uses an enormous amount of energy, right?
Yeah, they don't look behind the scenes.
So in any case, another thing that is an interesting sort of down the line thing that you might want to consider is server farms need cooling. So liquid cooling suppliers of GPU cooling systems, that could be a potential sort of play. In any case, so the way we look at Sasol is that we've got this long-term downtrend that looks as if it's in the early stages of finding a bottom.
Yes.
Now, we've seen this party before a few times, and it hasn't worked out. So this time is different, famous last words.
Yeah.
But essentially what we're looking at here is, if I'm going to switch back to a daily chart, we're looking at a situation where we are basically making higher highs and higher lows on this short-term trend here. So in this area here, let me just get my little pencil out. In this area here, we have sort of higher highs, higher lows, the beginning of a Dow theory uptrend, if you will. So we need to take out this high over here, and we need this move to take out this high. Once we've taken out those two levels, I think we are in a situation where we can comfortably say that, you know, the trend is turning higher.
Okay.
Today, it's performed really poorly. It's down almost 5% on the day.
And
production numbers came out.
Okay.
Now, yes, they were positive, but I think the market had anticipated slightly more. So the market's a little disappointed by that. And everybody who ran it up yesterday into today's news are essentially panic selling out today. So again, this is something that we could probably see as an opportunity. We think that in the longer term, Sasol is going to be a great buy. You're going to look back at this thing in 5 or 10 years from now and think, man, I managed to get under $100 a share.
Yeah.
So we're quite happy to sit with it. And, you know, if there is continued volatility in this and it's down big again tomorrow, we'll probably be on Twitter again saying, hey, consider buying some Sasol today. And then you take a bit of heat for that. And then 3 weeks later, be like, oh, so remember those Sasols? Yeah, we're selling them now. So
that's how it works. I'm just interested. You talk about this core investment and also this kind of money that then you get to play with. You have more money in the core investment.
So it's a bit of a interesting take on portfolio theory, right? So you have, let's say you have a portfolio of like $100, right?
Yeah.
You might want to use 30 or 40% of that money, and that is your ride or die investments, right?
Yes.
You are in long-term stuff that you truly believe in.
Yeah.
The rest of the money you might want to use for some market neutral plays. Say 20% of your money you're going to use to go long one gold stock, short another, because there's a correlation between the two of them, and that correlation is separated, and they might, you know, like for example, a good play with that would have been long Valterra Platinum, short Northern Platinum.
Oh, okay.
So, you know, you might hold a core long position in Valterra Platinum, which we do. However, you might have a short-term opportunity to do a pair trade or an arbitrage trade between the two of them. Other positions you might use for hedging or just for earning interest, right? So preference shares or fixed income investments or whatever. So you have a kind of a mix of assets, and some of the cash in the portfolio is for trading, right? So that's for generating alpha. That's taking 0.5% of my capital or 1% of my capital in a given share idea. If I make 0.3% or 0.2% or whatever, you know, profit on the total portfolio on that individual trade, great, right? I'm not taking a massive amount of risk, but I'm adding a little bit of alpha, if you will, over time. And that kind of does two things. One, it smooths out your total return profile. Plus, it reduces volatility, and it adds a little bit of alpha when you can, because you sit with a healthy component of cash a lot of the time, which you can earn great interest on, or put in an interest-bearing instrument, or, you know, which reduces volatility. And when there is an opportunity for you to use it to make little trades like this on Sasol, for example, then you can add 0.2, 0.25, 0.5% on capital here and there.
That is very, very interesting. Yeah, thank you for enlightening us on that. All right. So, okay, we see the Sasol chart. Now let's get on to Kumba iron ore. What are you looking at?
So Kumba iron ore is going to look very similar to Thungela. So I want to start with the Thungela chart first, because I think we spoke about Thungela some time ago.
Yes.
So firstly, we had this big block where we said, look, we've got this downtrend that looks like it's busy changing, and we've got this big sort of region in which we think the market might accumulate, and we used this, you know, we used history as a time where this was a significant level, it was significant resistance at some time in the past, and then a couple of times in history we've seen the market bounce off this level before, and we think that this is sort of an accumulation phase. So just looking at Thungela now, we're breaking out of that block, right? So our view is that the market has now spent its time accumulating, and from here we start driving the price higher, right? So we have a very similar situation on Kumba. So looking at the Kumba chart, we have a very similar situation. We've got this long downtrend that's been in place, and we're inside this little accumulation block. And just to go back in history to show you where it comes from, we can see that historically this has been a significant range that the market has traded in before, and when it came back into this space, it found a lot of buying interest there, and we, you know, managed to rally up to
How big is that range?
So this range is from 257 approximately to 322. So that's quite big. So call that $60, right? So that's quite a big range. I mean, that's 20%, right? So that's not insignificant. But essentially, we think that this is an accumulation phase. We have this downtrend that's busy breaking. And, if our views on the sort of commodity market or commodity cycle are correct, then we probably see, commodities in general rise, and Kumba will be well positioned to do that. I think that, we've been relatively bearish on stuff like the top 40 in recent times. Look, the market's run really hard. We have to eat some delicious hat on the back of that. Market, okay, it's down a bit today, but yesterday and the day before, it was just pushing record high after record high. So it seems that even though tariffs and Trump and all these other risks are, in the market, it's not managing to keep the market down, right?
Yeah.
So our view for a long time has been emerging markets, aka South Africa, outperforms developed markets.
Yes.
We were quite skittish, I guess, if you want to say, of the US market and so on, but man, these markets just keep pushing, and luckily we're pushing a bit harder than they are. So
is your view on the commodity cycle right now also tied to your view of the dollar?
So look, I mean, expecting higher commodities sort of implies you're expecting a stronger dollar, right? So I would say that, we probably see a stronger dollar over time. I think we'll probably see a weird disconnect where the rand continues to strengthen, but the dollar also continues to strengthen versus other pairs. So in other words, the rand relatively outperforms.
Yeah.
I think that we probably see increased commodity demand on the back of Chinese growth, potentially more than US growth.
Yeah.
US growth is going to be more consumer-led, it's going to be more tech-led, as where Chinese growth is going to be more manufacturing, I think.
That's also quite interesting, considering the fact that China has also been trying to prop up, I guess, consumer-led demand.
Yeah.
Is that just not working out the way that...
No, that's going really well. I saw a paper earlier it was late last week, so a little while ago, talking about how the Chinese transition from this, manufacturing sort of economy into a consumer-led economy is progressing along very nicely. But to be fair, China is a big place, right?
Yeah.
right?
Yeah.
And it's a very long transition, and there's still a huge amount of construction and still a huge amount of factories and production and things that happens there. It's interesting to me when people say that they think Chinese products are cheap when everything we use comes from China. Right?
Yeah, exactly. So, our expensive iPhones.
So they make good products and they make cheap products, right? So so it's interesting, and I think that that's a position that yes, if you look at the geopolitical situation, Trump wants to take all the production back to the US.
Yes.
But that will have an impact, sure. But just US, there's a huge amount of more production other than just US companies, right?
Yeah.
And that transition will also take some time.
Yeah.
So I don't think it's this imminent failure of the Chinese economy because they're going to start making iPhones in California, right?
I'm interested in the fact that the Kumba iron ore chart and the Thungela chart look similar. How? When it's two...
Well, they're two completely different businesses, right? One is more energy and one is more, steel, if you will. Well, I mean, they're interrelated. They're both essentially commodities. I mean, Thungela, I would liken, I suppose, more to like a Sasol because it's more of an energy kind of play.
Yes.
As where Kumba is more of a commodities kind of play. But they're both interrelated, right?
Yeah.
One, I suppose, backs the idea of, Chinese factory production picking up. And the other one backs the idea of just increased energy demand, right? I mean, we have a situation where the world is slowly waking up to we can't really just get rid of fossil fuels. Everybody was ultra keen to go green, which is great. But the energy demand continues to grow.
Yeah.
We can't just get rid of coal, and we can't just get rid of oil, and we can't just get rid of all these dirty energy sort of supply, if you will. And we see slowly a recommissioning of coal-fired plants, and we see slowly a recommissioning of nuclear power stations. Nuclear power obviously is still something that we back very big in the offshore portfolio, particularly looking at uranium. I think this is something that we've looked at in the past as well. I'm not sure when the last time we spoke about uranium on this show, but I mean, if you look at this URA ETF, it's really going very, very well. So this is something that we've been quite bullish on for years now, right? And in times you feel 2024 2024 into mid of this year, you feel like you're on the wrong side. But the further you zoom out of this thing, the more it just runs and runs and runs, right? So, so that is kind of where we see the energy market going in general. Uranium has an outsized opportunity to do really well.
Yeah.
There's no real way to get uranium exposure in the South African market. So,
Okay.
you know,
So you have
Thungela
to
is as
go-
close as we're going to get.
Okay.
We've got to punt dirty coal here, which is fine because there is still an enormous amount of demand for that.
Yeah.
I mean, the lights are on
It's-
because of it, right?
Yes, hallelujah. Well, thank you so much for your time and those very, very interesting insights, Petri, and just for making us a little bit smarter today. That was Herenya Capital's Petri Redelinghuys. And that's all for this week's segment, but stay tuned for lots more coming up right here on Business Day TV.